Okay, all right. Welcome back, Fail-Safe investors, or welcome to my page, Fail-Safe Wealth. I pretty much have a specialty video for you all today. Today we're going to look into Hertz and see not what caused this company to go into bankruptcy, or pretty much if this company could have avoided bankruptcy. Pretty much the question or the point that I'm going to try to get across to my Fail-Safe investor or the Fail-Safe crew is that if you would have looked at this company fundamentally, meaning looking at the financial statements, the balance sheet, the income statement, the cash flow statement, and then everything else with this company, and even like glance at the 10K, you would have seen that this business was not profitable for quite some time now, and you probably could have been able to avoid some losses in your money if you was invested in this company. But without giving you too much details, let's just get into the video. Let's go. So I'm going to use Hertz as an example to show you that you should really do some fundamental analysis, not just technical analysis, or not just invest off of emotion and trends when it comes to investing in the stock market. Now, recently on May 22nd, Hertz filed for bankruptcy, and after that, the stock pretty much shot up, and all of that was pretty much based off of hype, to say the least. Now, I personally have experienced something like this. I have bought a stock that pretty much was down, and I was thinking like, okay, it'll go back up, so I bought it at its low, and that company was H.H. Gregg. So I purchased H.H. Gregg. I bought like 14 shares. They were like $1 per share, and I'm thinking like, okay, this company's gonna go back up. So I was one of those people that had like optimism in the stock market that every company goes back up. And to make a long story short, H.H. Gregg filed for bankruptcy, and I am no longer to sell the shares that I even have, because in order to sell a share, someone has to be pretty much bidding to buy that company. So since no one's trying to buy any H.H. Gregg stock, I just have 14 shares of nothing that's valued at like 2 cents, like total 14 shares and 2 cents. So I won't get anything for the stock, so I just leave them on my pretty much account. But it's pretty much the same thing with Hertz. And if you are thinking about investing in Hertz and riding the wave up, I'm just gonna make a couple points in this video to not deter you from investing in Hertz, but just to give you some perspective on the company and see what's really going on under the hood. So Hertz, ticker symbol HTZ. Before the stock market crash, we'll just call it a stock market crash in March of 2020 this year. Before the stock market crash, Hertz was selling for around $20 a share, right? Now, before that, Hertz all-time high was around like $80 to $90 a share. So before that, Hertz all-time high was around like $80 to $90 a share. But that was back in like 2014, maybe close to 2015. So if you already wasn't invested in the Hertz, and let's say you were thinking about investing in Hertz at the beginning of this year, if you would have done a fundamental analysis on Hertz and looked back, let's say just the last 5 years, back up to like 2015, which all of this information you can see on like Yahoo Finance or any like brokerage app that you use to trade. If you look at the history of Hertz, you will see that they were losing money from 2015 year over year. And if you compare their income statement and pretty much place it over their stock chart, it pretty much lines up with the downward trend. And so it's not hard to see that this company was already losing money. This company was losing revenue. It was not being profitable from 2015. And pretty much the basis of investing at a base level is to invest in a profitable company so that you can take part in the profitability of the company. So Hertz was losing money from 2015, going on a downward trend. So even without a recession or a market crash, this company probably was going to hit a wall at some point. With Hertz losing money, not only were they losing money, the fundamental aspect of their company has pretty much changed with the pandemic that was going around in that time, or is still currently going on around right now. So usually I did make a video on like when to sell a stock, and I didn't mention in that video that if a company is trending downward, the only time that you want to sell if a company is trending downward is for one reason, and that's really if the fundamentals of that company has changed. So A lot of Hertz business revolves around the travel industry. So a lot of people, or about 70% of their cars are rented for leisure purposes. And since no one's really traveling like that anymore, no one's really renting any more cars, so the fundamental aspect of this company did change. So that would be a reason to sell, but it's more to this story. So if you didn't sell because of that, then this might be another reason to sell. So after Hertz filed for bankruptcy on May 22nd of 2022, which was a Friday, that following Monday or Tuesday, the biggest investor in Hertz pretty much sold out all of his shares. So it's like Carl Icahn or something like that. He sold 55 million shares just all at once, pretty much dumped all of his shares on the market. And that just definitely hurt Hertz. Even though he dumped 55 million shares, which was about 38% of the company's holdings, it didn't have that much of an effect because the company was already hurt by that point. But after the company filed for bankruptcy and he sold all of his shares, a lot of people caught wind of that and figured that they can buy into this company because it'll be bailed out, or for whatever reason that people thought that this company had potential and they could just ride the wave back up. A lot of people purchased shares. In that following week, it was 2 billion shares purchased, making that stock shoot up to about $6.25 a share. And then, as expected, in a company like that with a huge gain in a short period of time, it was a huge sell-off. And that huge sell-off led to the company being sold around like $1 or $2 right now. So pretty much everyone pumped it up, sold out, took the profit out of the company, which happens with companies like this. And if you're thinking about investing in Hertz right now, I would definitely recommend against it because, like I mentioned with H.H. Gregg, I thought this company could go back up. It still had potential. But it's like, what are you getting for your purchase right now? So Hertz balance sheet is terrible. Like, they have $24 billion in total assets listed, but $4 billion of that is an intangible assets. And like I mentioned before, intangible assets is exactly how the word sounds, is intangible, something that you can't actually grasp. And they have $22 billion in total debt. So that is a lot of debt for a company that only brings in about $9 billion in revenue in a good year. And it costs about $5 to $6 billion cost of goods. So it's like they're spending $5 billion to make $9 billion, and they have $13 billion in capital expenditures. So this company was already in a bad shape before filing for bankruptcy, which is, of course, why they filed for bankruptcy. Now they have filed for Chapter 11, which means that they can restructure their debt. They just got approval from a judge to issue even more shares, which will dilute the shares that investors already have. So if you already have shares in Hertz, more shares are going to hit the market, which will dilute the shares that you already own, which will make the shares that you own worth less. Not worthless, but worth less money. They will be valued less. Now, with $22 billion in debt, Hertz only have a market cap of like 240 something million, not billion, but million. So they have to pay off that debt. And at any point, this company can liquidate all of its assets, which would be the investor's investment, and leave you with nothing. So that's pretty much what happened with me. H.H. Gregg had to pay off all of his debt, leaving me with nothing pretty much. So I'm just saying, I'm just gonna say it straightforward, do not buy Hertz. The train is over with. The show has come to an end. They'll probably end up having to sell all of their assets, which will be all of their vehicles. I hope this is a message that you take to heart and you listen to me on this one. Do not buy Hertz. It is a bad deal. Stay away from it. But I'm just trying to give you information of what's going on right now. And even though Hertz is trending, I definitely would not invest in it. It's not worth it. Everyone who already invested in Hertz for the gains have taken the gains and got out of the game. It's just another video that I'm trying to release to stay up on the times and what's going on in the world around us right now. But use this video as an instructional video to really get it into your head that a fundamental analysis is key when it comes to investing in a company. You have to look at the financial statements. You have to understand the basics of a company. You have to understand the management team of a company. Hertz paid their executives a couple $1 million while also laying off thousands of employees. You have to understand and look at things like that. So I'm just saying, take all of this and do what you want with this information. This is just another video to keep up with the times. And hopefully I can have more videos that educate you as a viewer and we can grow together. But till then, let's do it.